Hello, welcome to European Open briefing for Friday, November the 9th. I'm Rafi Bayajian, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. There's a bit of risk off sentiment in the markets this morning. We can see all indices in Asia ended the day lower, and we also have a negative start in Europe as well. It was mixed on Wall Street overnight after the Fed, although they did hold interest rates unchanged, as what had been expected. They signaled that they will continue raising rates gradually. So expectations did go up slightly for a December rate hike. So that also lifted the US dollar. We can see the dollar index, in fact, was one of the biggest gainers yesterday. It's up a further 0.1% this morning at 96.83. Dollar yen rose sharply yesterday as well. It's slightly lower today at 113.75. Both the euro and the pound have reversed lower against the US dollar. The euro dipping back below the 1.14 level. This comes apart from the stronger dollar. We did also see downward revisions to Eurozone growth, as well as ongoing concerns about Italy's budget standoff with the EU. Sterling also pairing some of its recent gains, falling towards the 1.30 level as the pressure is on for Prime Minister Theresa May to strike a deal with the EU in the coming days. The Aussie and the Kiwi also down. The Aussie getting some support from the RBA monetary policy statement, where there was some upward revision to growth and inflation forecasts, but we are seeing some renewed concerns about slowing Chinese growth. The loonie, on the other hand, is being weighed by lower oil prices. We're seeing WTI touching 8 months lows at $60.21 a barrel at the moment. The loonie falling to 1.3191 at the moment to the US dollar. And if we have a look at the main performers, we can see oil, the worst performer, followed by euro yen. The yen is broadly up this morning on that risk of sentiment. The loonie also the worst performer, dollar CAD being the best performer. And taking a closer look at the dollar-yen pair. So although the yen is broadly firmer against the dollar, the dollar itself is doing rather well as well. Yesterday, dollar-yen touched a 5-week high of 114.08. It's slightly lowered this morning. So the Fed signaled further rate hikes. We saw the 2-year yields jumping to a 10.5-year high of 2.9. 7%. Although the odds for this rate hike didn't go up that substantially, so that does signal that as we head closer to December and those expectations firm further, we could see the dollar potentially rising further ahead of that December rate hike. In the statement, the Fed didn't really change much in its language. They were fairly confident about the growth and inflation outlook. They were only a little bit worried about a weaker business investment, but there was no mention of the recent sell-off in the stock markets. The prospect of higher rate increases, further rate increases in the United States, somewhat weighing on global market sentiment this morning, and also pulling the euro lower. We can see the euro dollar falling back below its moving averages in the 4-hour chart. It's heading towards the 1.13 level once again. Apart from the stronger dollar, we saw both the IMF and the European Commission lowering their growth forecasts for the Eurozone for the next couple of years. And also there's concerns about Italy still. The European Commission is forecasting Italian economy will grow by 1.2% next year. The Italian government is projecting 1.5%. So there's doubts about the Italian government's numbers there, meaning that if the Italian economy doesn't grow as fast as 1.5%, it's unlikely the budget deficit will be as low as 2.4%. It could potentially be closer to 3%. So the Italian government desperately now needs to find a compromise. For the time being, though, they're unwilling to change anything about their budget. We have a deadline coming up next week, so we could see some escalation in the coming days regarding the standoff between Italy and the EU. And a quick look at the Australian dollar, we can see the Aussie drifting away from yesterday's 6-week high of just about the 0.73 level against the US dollar. So although the RBA did raise its economic forecast, they also did reiterate that they do not see a strong case to adjust the cash rate in the near term, somewhat weighing on the Aussie that statement, but also we saw Chinese producer prices earlier today coming in below expectations, falling further in October. That points to slowing domestic demand for raw materials. We also had some further measures being announced by Chinese authorities to force banks to lend to private firms, so that further raises concerns about the slowing Chinese economy. So that's contributing to the risk of sentiment. Looking at what's coming up later today, the focus in the European session will be UK GDP numbers for the third quarter, and in the US session we're going to have producer prices for October as well. That's it from me. Thank you very much for watching and have a great day.